Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading here. And I'm going to go over some key economic data that came out today that made the market skyrocket. Okay. That's the PCE price index. This is something that the Fed looks at. And the core PCE, more importantly, is what the Fed, their favorite inflation gauge. Okay. So we saw the core PCE still very stubbornly high at 4.6%. The estimate was for 4.7%. So a little bit better than expected, but still much, much higher than the 2% that they're looking for. All right. This has not moved much. We see the 4.7, 4.7, 4.6. It's been in that range for a very long time. Now, what has moved is the PCE year over year price index. That came in at 3.8%, much better than the 4.6. But like I said, this right here, that is what the Fed looks at. The Fed does not care about this. The Fed cares about that core PCE, and it is still stubbornly sticky. So if we take a look at what the PCE is, right? That's the headline number. That 3.8%, that was a good number, right? The forecast, like I said, was 4.6%. Now, what is so different about this and what is so different about the core PCE? Well, this one you can see here on the graph. If we look down here, during the pandemic, obviously inflation rose and now it's on its way back down into the threes. That's very good as far as that headline number goes. But what they look at is this, the core PCE. This is the measure of the PCE price index, which excludes the food and the energy. And that, you can see by the graph, has not changed. All right? They will not stop raising rates until they get this way down. You can see down here, it usually will average around 2%. This is still very high, and it's simply not moving. It's simply not moving fast enough, like that overall headline number, which peaked out back here. All right. It has come on down, which is very nice. But as far as that core number goes, which the Fed looks at, it's just not doing anything. All right. It's simply not doing anything. The consumer is still spending a lot of money. Now, what is the effect on the stock market? The stock market, taking a look at the SPY here, this had a very nice breakout of this bull flag and then broke out. Gapped up today, like I said, on that report. Whether you think it's a good report or a bad report, the headline number looks good, but the core number still does not look very good. Either way, you don't want to fight the tape, right? So there's a saying, don't fight the Fed, don't fight the tape. Fighting the Fed would mean that you think the stock market is going to continue to go up and rates are going to be cut. All right? That's not happening. But you do see the market totally fighting the Fed. Now, if you're investing or trading, you don't want to fight the tape. All right? The tape is showing a lot of strength. A lot of strength. I mean, we're sitting here at highs on the year. All right? And we're currently at the highs of the session. So we gapped up. You can see this really nice gap up. Huge move for the index. Up over 1%. The NASDAQ, same thing. Up over 1%, 1.67%. So the market looking very strong. We have this trend line here. And we are right now flirting with those highs. Okay. The highs that we hit right back here on the 15th, 2 weeks ago. So we just got right back to that level. So we got to wait and see what happens. The market is starting to go back to that overbought territory. But like I said, if you start fighting the tape, it could end pretty bad. You would be getting hurt all the way back from October if you were fighting this trend. This is where we are right now. So the market's looking strong, but like I said, coming up to prior highs here. We'll see how we close the day. It's only 2:42. There's still a lot of time left in the day. All right, so that's a quick recap on the market and the PCE indicator. Hit the thumbs up for the video. I'll see you on the next one. Take care, guys.